What if the biggest danger right now isn't that the Fed hasn't cut interest rates, but that millions are still waiting for them to? Studio microphone, you see, like millions of people across the world, you're probably holding your breath, waiting for something that sounds so simple. The Fed will cut rates. And when that happens, we tell ourselves, things will get better. Cheap money will return. Investors will finally breathe. Stocks will rally. Real estate will come back to life. Businesses will recover. It all sounds so comforting. But here's the truth. You're not alone in that hope. You're standing shoulder to shoulder with a crowd staring in the same direction. And that's the problem. Here's the question almost no one dares to ask. If the Fed knows the economy is weakening, why are they still holding interest rates so high? What's stopping them? What are they seeing that keeps them holding the public under this financial chokehold for nearly 2 years straight? Let me be clear. The answer is not written in bold in the FOMC press release. It's not in Powell's tone or projections. The answer lies in a cold, ruthless truth. Who loses if interest rates drop? And who wins if you stay stuck? This means you're not just facing monetary policy. You're facing something much deeper, a systematic trap engineered to keep you inside the system as long as possible. Pushpin: the Fed isn't avoiding rate cuts because inflation isn't under control. Pushpin: they're not delaying because the economy isn't strong enough. Pushpin: they're not waiting because they're cautious. No, they're waiting because they need you to keep paying high interest. They need you to cut your spending, feel the squeeze and weaken slowly, but not fall apart. They want your compliance, not your collapse. Because when you're stretched thin, when you're barely breathing but still standing, you become the perfect participant in their next phase. That's when they cleanse the market, they let fragile businesses die. They engineer deep discounts on valuable assets. They wait as the market bleeds so they can quietly buy back the world from the hands of overleveraged, exhausted risk-takers. And above all, they can't cut too early. Because the moment cheap money returns, new bubbles inflate. Risk-taking surges. Speculation reignites before they finish buying. Have you ever heard of the dead cat bounce? It's when a market appears to recover for a moment, but the movement is just a reflex from something already dead. Direct hit: the Fed understands this, and they're actively preventing that bounce, because they want more time, more silence, more clearance. They're not trying to stabilize markets. They're trying to clean up the battlefield, before the rest of us even realize we're in a war. Still don't believe it? Look at the signs. Pushpin gold is breaking all-time highs. Pushpin Bitcoin is back to $70,000. Even in the middle of tightening, Pushpin hedge funds are exiting growth stocks, buying short-term bonds, and pouring capital into overseas real estate. Pushpin SME bankruptcies? Up 38% and rising. And yet, the Fed hasn't pivoted. No hints. No mercy. I'm not saying this to frighten you. I'm saying it because you need to wake up. Because if you're still waiting for the Fed to act before you act, then you're standing exactly where they want you. Frozen. Hesitating. Easy to predict. Easy to trap. At this moment, the smart investors aren't asking, when will the Fed cut? They're asking, what will I do if they don't? Because this phase? It's not for traders. It's not for the hopeful. It's for strategists. This is not the time to ride waves. This is the time to build your ark before the flood. If you look closely, the market isn't collapsing in flames. It's decaying slowly, methodically. That's more dangerous than panic. Because life still looks normal. People are working, spending, smiling. But underneath that normalcy, Pushpin core inflation remains sticky. Pushpin real growth is weak. Pushpin personal debt? Reaching record highs. Studio microphone people are no longer living on income. They're living on debt. Car loans, student loans, credit cards, medical bills, mortgages, even groceries on installment. This economy doesn't revolve around wealth creation anymore. It revolves around debt rotation. And the Fed? They're the ones keeping the wheel spinning just long enough for someone else to collapse first. Direct hit: small businesses are quietly dying. Direct hit: but because the giants still stand, the media stays quiet. Go walk through a suburban mall, a second-tier city, a mid-sized industrial park in Europe. You'll see its shops shuttered, dominoes falling with no push needed. And behind it all, the credit market is locking up. Banks are tightening. Consumer loans are disappearing. Access to money? Vanishing. Even if you want to borrow more, you can't. Direct hit: and the worst danger? Hidden unemployment. You won't find it in job reports. It's in the silent messages. The freelancer who hasn't had a client in weeks. The employee quietly losing hours. The startup too weak to close but too broke to grow. You won't see those numbers, but you'll feel them in conversations, in inboxes, in overdue bills. Studio microphone, the truth? Interest rates aren't a cure anymore. They're a cage, a noose, perfect, silent prison. You're not stuck because you're foolish. You're stuck because your struggle sustains the system. They won't cut your chain. They need you to keep running in the wheel, marked monthly payments. The Fed knows it. The government knows it. The hedge funds know it. They're just waiting. Watching. To see who breaks first. If you're still clinging to hope that the Fed will eventually come to your rescue, let me tell you this, hope is not a strategy. Studio microphone, this market. This entire economic structure is not waiting for you to catch up. It is actively sorting those who act from those who hesitate. Direct at the investor who survives. This isn't the one watching charts all day. It's the one who prepares their exit before the system tightens the screws. Because the collapse at the end of 2025 won't happen in one explosive moment. It won't be a market crash broadcast in red headlines. No, it will be a slow, psychological erosion. One where investors sell off their assets piece by piece until they wake up one day and have nothing left to sell. Chart decreasing the rich? They don't wait for the bottom. They build their own safe zones before the storm. Direct hit the awake don't wait for policy easing. They release themselves from false hope. This is not the time to chase dream portfolios. This is the time to choose your place on the battlefield. If you've made it this far in the video, congratulations. You've already separated yourself from the 80% still asleep outside. Studio microphones, so many are still secretly hoping. Maybe the Fed will cut rates by the end of the year. But let me ask you this, if your entire financial plan is based on the Fed's reaction, what happens when they don't react? Direct hit, a successful investor doesn't operate on reactions. They operate on prepared strategy. So let's get tactical. Here are 3 scenarios that I and many veteran investors are preparing for. Because if you wait until they happen, it's already too late. Scenario A, the Fed holds interest rates high through the end of 2025. Studio microphone, this is not a fringe prediction, it's the most probable one. Pushpin core inflation is still sticky. Pushpin US consumer spending hasn't broken down yet. Pushpin the Fed needs to maintain a strong front to protect market credibility. Direct hit, what does that mean? SMEs, small and medium enterprises, will continue to fail silently. Consumer credit will dry up. People with mortgages, student loans, credit cards will default layer by layer. Financial stocks, banks, insurance will become the next dominoes. Strategic move? Exit high-risk paper assets. Rotate into physical gold, real estate with real income, and non-dollar hard currencies. Direct hit, don't hold what you don't understand. Direct hit, high rates won't kill you fast, they bleed you slow. Scenario B, the Fed cuts 0.25% in a symbolic gesture. Studio microphone, this is the market-pleasing move. But the effect? Purely short-term euphoria. Chart increasing, expect stock markets to spike for a day or two. Rocket crypto, tech, and speculative assets will surge briefly. But what does it really mean? Direct hit, it's a fake comeback party. And if you're not careful, you'll be the one refilling everyone else's drinks while they quietly exit with the profits. Strategic move? Take short-term gains. Then rotate fast into underpriced hard assets, real estate, gold, industrial commodities. Direct hit, wise investors don't chase. They reposition ahead of reality. Scenario C, the Fed is forced to make an emergency, large rate cut. Studio microphone, this is the ugliest scenario. The Fed doesn't act unless something big breaks. Pushpin, a major bank collapse. Pushpin, a government bond panic. Pushpin, a hidden contagion finally going public. Direct hit result? Inflation roars back. Markets soar in chaos. The US dollar weakens violently. Investors run from the US financial system. Strategic move? Minimize cash. Maximize real, mobile, liquid assets. Stay nimble and always ready to pivot. Direct hit, because when the driver loses control, you don't ask where they're going. You grab the wheel for yourself. So, what's the most dangerous element in all 3 scenarios? It's not the scenario itself. It's your mindset when it arrives. The rich don't win because they hold more. They win because they plan better. Direct hit, they see patterns. Direct hit, they prepare options. Direct hit, they never rely on luck. Look at the signs around you. Pushpin, the Fed's refusal to pivot. Pushpin, the slow death of the bond market. Pushpin, Americans defaulting on payment plans. Pushpin gold rising quietly like a shadow. You feel it too, don't you? That quiet itch that something is wrong. Direct hit, you're not imagining it. You are living inside a highly engineered financial trap. Built quietly, maintained silently, and designed so that you don't even know you're caught until it's too late. This market is not for dreamers, not for those waiting for fairness, not for people still believing in policy promises. Direct it, you need to be early. Direct it, you need to read between the cold, dry lines of FOMC minutes. Because if the Fed hasn't cut rates, it's not because they don't feel the people's pain. It's because they need you to hurt longer to keep you inside a longer, deeper debt chain they can still control. Smart investors don't wait for the air to clear. They cut exposure early. They go defensive first. Then they swoop back in after the system breaks, not before. Direct hit, from now to the end of 2025. Monetary policy is no longer a rescue tool. It's a mechanism to regain control over those trying to break free. Direct hit, if you hold gold, you're a threat. Direct hit, if you avoid debt, you're a problem. Direct hit, if you own real assets, you're harder to control. So if you're still sitting on growth stocks expecting rebounds, reevaluate. If you're hoarding cash with no plan to redeploy, you're wasting your weapon. And if you're paralyzed between fear and confusion, step back. Rebuild. Direct hit, focus on safe haven assets, strategic liquidity, cash flow you control. Direct hit, the rich don't react more often. They react more accurately. They know when to sit still. They know when to take losses early. They know when a small sacrifice buys long-term position. So if you're in the trap, don't wait for someone to open the door. Start cutting the chain one strategy at a time. Because the market doesn't reward those who wait. It rewards those who exit before the forced liquidation. Direct hit, in this cycle, there are only two types of people: those swallowed by the market without knowing why, and those who understand this is not a crash. It's a cleansing. Which one are you? I can't pull you out of the trap, but I can give you the map. Direct hit, that's the real purpose of this video. Not to promise a rescue, not to offer comfort, but to hand you a mirror so you can finally see the walls around you and the exits no one else is talking about. Studio microphone, if just one sentence today made you pause even for a second, that is the first step to freedom. Not freedom in the form of riches, not a yacht or early retirement, but something far more important: freedom from blind fear. Because people don't run from fire, they run from smoke they can't see through. By the end of 2025, I believe we'll witness a major shift in this market cycle. Pushpin, people holding cash will suddenly start buying distressed assets. Pushpin, those holding the wrong stocks will be forced to take painful losses. Pushpin, those carrying the wrong debt at the wrong time, they'll be liquidated by force. And the one who survives, it won't be the one with the most technical skill. It will be the one who held on to their mental clarity while the world flipped upside down. Direct hit, that's what separates the casualties from the architects. If this video spoke to you, save it. Share it with someone you think is drowning in silent fear. Not the loud, obvious panic. The quiet kind. The kind that looks like procrastination, like over-researching, like hesitation masked as logic. Direct hit, subscribe to this channel, Prosperity Magic, not because we give you predictions, but because we hand you tools. Tools to stay grounded when the system tries to shake you loose. Direct hit, turn on notifications. Because in what's coming next, you won't need more data, you'll need decisiveness. If there's still a part of you thinking, maybe I'm overthinking all this, let me say this plainly: I'm not here to make you paranoid. I'm not here to rescue you either. Direct hit, I'm here to help you see clearly who laid this trap, why they did it, and why you need to leave the table before they close the doors. Direct hit, the system isn't built to free you. It's built to keep you turning, paying, carrying, fueling a machine that does not care whether you win or lose, only that you stay in motion. Thank you for staying until the end. Studio microphone, this isn't just a video. It's a strategic warning. What you do with it, that's your choice. Direct hit, will you close the tab and keep hoping? Direct hit, or will you take one small action to shift your position before the music stops? As for me, I'll still be here, watching the patterns, decoding the signals, sharing what others ignore. Studio microphone, not because I know everything, but because I've been inside the trap before, and I know what it feels like to be running hard and going nowhere. Direct hit, I didn't survive by luck. I survived by thinking differently. We'll meet again in the next video, when the wave rises again, and the ones who saw it first. Direct hit, they won't be running. They'll be riding it to win. Pushpin, subscribe now. Speech balloon, comment below, what's your biggest financial blind spot right now? They'll share this with one person who needs clarity more than comfort. You're watching Prosperity Magic. And this is just the beginning.